Welcome to China's stock market. This is a weekly wrap where we cover all the major issues or news events that have come out of China. If you're invested in China, if you're thinking about investing in China, or you've got a keen interest in Chinese stocks, then this is the show to be watching. Please subscribe if you're on YouTube, leave us a comment, hit the like button, and if you're listening on podcasts, leave us a 5-star review. I'm Jack Kuzi, I'm your host, and let's get straight into it. And as always, we begin with a disclaimer. Just remember, this is not a recommendation to buy or sell securities. It's my own personal opinion. I try to keep it as factual and up to date as possible, but can't guarantee it as always. And remember, you may disagree, you may agree. Let me know in the comments section. All right, let's get through the agenda for today. We're going to do quick hits as usual. Some of the quick hit news stories around China and its stock markets. We'll go through the market performance, another good week, particularly for the mainland. And then we're going to go through earnings reports. And there are a bunch of earnings reports this week, and I had to pick some. So I definitely picked Tencent, definitely picked Pinduoduo. We're going to talk about new highs on certain markets in China and Hong Kong. We're going to talk about capital inflows, particularly in that northbound connect. So coming from or through Hong Kong into the mainland. We're going to talk about EVs and the uphill battle into US markets, particularly after Trump's remarks around a 100% tariff. We're going to talk about Kuaishou, the forgotten video platform within China. I still remember when this listed. And then we'll talk about XPENG. I'm not going to cover XPENG's earnings in detail, but really just talk about, how it could be a more of an uphill battle for EVs, as we point out in point 7. All right, let's get stuck into it. There was a lot this week. Let's just go through quick hits. Yesterday, Tesla raised prices in China. We're going to talk about the uphill battle of Chinese EVs, but this was kind of a bit of a positive news. If Tesla is raising prices within China on certain models, then maybe the price war is over, and demand is starting to pick up again. So I thought that was an interesting point to mention in quick hits. Chinese fintech giant Ant Group is kicking off a restructuring. So under the restructuring plan, they're going to revamp their overseas business units. Remember, this is the largest payments company in the world that famously was going to IPO and they got scuttled a couple of weeks before the listing. The 3 companies will adopt their own equity incentive programs that are more compatible with the startup status for employees. And holding company will provide governance, technological risk control, and capital support. Now, the reason why I mention it is, are we getting closer to that famous IPO? Probably not, but they are making some moves. Can't wait to see this IPO. Would love to look under the bonnet, see what's going in the largest financial payments company in the world. But that was interesting news. Alibaba expands 5-day delivery service to the US and Germany, France and Saudi Arabia amid rising competition with rivals Temu and Shein. So if you look at AliExpress in the last earnings report, a rising portion of their revenue, still small but rising, and they're just looking to expand their services. Yes, in response to competition, but also to increase market share. So Alibaba's international e-commerce platform can receive their parcels in 5 days, delivered by Canio, the Alibaba logistics unit said on Tuesday. Alibaba said its latest quarterly report that Canio will stick to its strategy of building a global smart logistics network by improving freight transport, customs clearance, parcel sorting, and delivery. I mentioned this a little bit on TikTok when I talked about Pinduoduo's earnings around the tariffs under $1,200, but we'll mention it a bit later when we run through Pinduoduo. And then Tencent, which we'll talk about their report today, or their earnings report, they were given their payment arm, WePay, was given approval to raise its registered capital to 15.3 billion yuan, according to the central bank updates on Friday. This will make Tenpay Payment Technology Co. the largest non-bank payment provider by the measure. The approval increases the amount of capital that investors can commit in the operation of WeChat Pay. So basically, go out and lend more if you want to, is what I get from this, which tells me, we talked about this a couple of weeks ago. We'll talk about it a little bit more. I'm actually going to do a video on TikTok about it, China's stock market, if you're not listening. it's kind of like a free rein. They're allowing them to expand now. Alibaba got to invest in AI. 600 million in that $2.5 billion valuation with another one. Tencent's allowed to, increase its lending. I just feel like the shackles are off. Not completely off. There are still boundaries. This is China we're talking about. But they're off to grow. And that's why I think China's tech companies are a once-in-a-generation buy. But remember, that is not a recommendation. All right, let's talk about market performance. So we're going to cover Friday to Friday. So we're back to covering, Friday to Thursday. So Friday the 16th of March to Thursday the 21st of March. It is the 22nd of March here in Sydney, so we missed that Friday. We run the last 5 days. It's 7:30 a.m. here in Sydney. Got up early to film this. Another good week for the SSC, 1.14% up. Shenzhen 0.88, Hang Seng down 1.5. I think a lot of that has to do with the large tech companies within China being listed on there, and the whole ByteDance saga. And you had some earnings out there, which some were received well. Pinduoduo is not listed on the Hang Seng. It had a big pop. Some people say that's one of the reasons why it's rallied so much, but it's rallied so much because it's an awesome company. However, 1 month, 3.94. The Shenzhen up 9.31% for the month. Massive moves on the mainland and 6% for the SSC Composite Index. Pretty good. Weak if you were invested on the mainland. Not so good on the Hang Seng Index. However, the monthly and 3-month performance are looking quite positive for all indexes across there. All right, let's hit some quick ones and then we'll move into some reports. The LPR rate, that was announced yesterday. So if you don't know what the LPR rate is, it is the loan prime rate. There's a 1 year and a 5 year. The 1 year is the lending rate provided by commercial banks to their highest quality customers, and serves as the benchmark rates provided for other loans. Okay, so business loans, pretty much business loans really. The 5 year rate is the gauge they use as the mortgage reference rate. Now we saw a couple of weeks ago they lowered that to 3.94, I think, 5.95, which was the lowest rate they've ever had, or was the lowest move, the biggest move lower they've ever done. But they kept it steady. I think they're keeping it steady. I think we won't see an LPR. We won't see think about it like interest rates, like when you think about the Fed interest rates or your local central bank interest rates. I don't think we're going to see a lowering of rates until the US lowers their rates because they're concerned about the weakness of the renminbi. Right? And if you don't know how that works, if someone's offering higher rates, cash flows to there, you sell down the local currency, you buy the foreign currency because you want to receive their rates. That weakens your currency. They're concerned about the weakness of the renminbi. The weakness of the renminbi, the renminbi has been quite weak. And probably the biggest reason for that is capital outflows. People are selling down Chinese assets and moving out. You sell down yuan, you buy overseas currency, it leads to a decrease. So I don't think we're going to see a move until we see the Fed move. The Fed did indicate that they were going to move this year. So Chairman Jerome Powell came out and said, in all likeliness, if things continue, we will see a move down. No movement on the dot plots. Market like that. I have my certain views about that, but this show is about China and we only talk about China, but of course we've got to talk about the rest of the world because they are part of the rest of the world. All right, let's talk about earnings reports. Let's talk about Tencent, China's flagship company. Everybody knows Tencent. Well, everybody should know Tencent. I actually bought some stock off the back of this report. I already own it, but I am going to dollar cost average into Tencent and Alibaba and Meituan anytime I can over the next 6 to 12 months. I own a lot of these. It's been a tough couple of years, but I am very bullish China and I'm even more bullish Tencent off the back of these earnings. Let's go through the headline numbers and then I'll give you my thoughts. All right, so let's have a look at these numbers. Revenue increased by 7%, and that was a rise in the fourth quarter of 7%, weaker than expected. Now, they the headline will say gaming revenue declined by 3% and only a 1% increase internationally. Yes, I agree. We'll talk about the share buybacks in a moment. Now, they talked about a slowdown in gaming revenue, and that was attributed to a surge of, while they were locked down, people at home, you surge in gaming, you open up, that was soft. And they've kind of been a bit lackluster in their gaming area. Now, often when we talk about Tencent, we talk about Tencent, largest gaming company in the world. Yes, I agree. However, 10 years ago, 41% of their revenue was gaming. That's around down to about 27%. So it's a little bit lower than we think in terms of their total revenue. And I'll say why that's important in a moment. They did talk about releasing Dungeon and Fighter Mobile in the second quarter, which they anticipate will generate anywhere between 3 and 4 billion yuan. And Tencent annual revenue for the last year rose by 10% to 609 billion yuan, slightly below expectations. So a little bit down on gaming, but they are making moves to improve that. There's been some structural changes, some employee changes really at the top line, and they are going to get into that short gaming, looking to increase that short gaming, which is actually quite profitable. Now, the net income for the quarter was down 74%, so quarter on quarter, but that was because of the sale of their stake of Meituan. So if you exclude those investment-related transactions, quarterly profit grew by 44%, and that's where you get the adjusted net income there. They did say they weren't worried about further restrictions on gaming. What they did say in the earnings call was they felt like they were already in line with some of the new policies brought out by the regulators and by the overarching government, and they weren't really concerned about it. And when they looked at their modeling, when they looked at their users, they were kind of in line, and they didn't think it was going to be a big issue for them going forward, which I thought was okay. What I did like out of the report was their increase in advertising, online ad revenue, and revenue from fintech business services. So these are really high margin businesses, and they increased. So online ad revenue increased by 21%, and fintech and business services grew by 15%. So online ad revenue, indication that China is growing again, right? The consumption is coming back, and fintech and business services grew, which indicates, businesses are growing, businesses are investing, they're borrowing money. I think this is a really good avenues for them going forward. When you take the gross profit, right? When you take the gross profit and you take that and you look at it year on year, we're seeing a real acceleration of gross profit for this company with a 25% year on year increase in the quarter. And that's because they're focusing on good revenue streams with better margins, which are the revenue, online advertising, and the fintech business services. Okay, so if you draw that out and you go forward, we're looking at double-digit returns in terms of revenue going forward and an annualized growth rate of around 15%. That's not bad. That's not bad. Now, when you compare it to the Magnificent Seven, it doesn't look great, right? And I was listening to a Bloomberg interview where the guy said people in the US don't get out of bed for 15%. However, when you look at it in terms of multiples, it looks quite good. And remember, it's been stunted in its growth by overarching tech regulation and the slowing of the economy. So I thought that was good. I thought that was really good. If you look at the advertising and fintech upside, I think there's considerable growth. And what we also saw out of Tencent was sustainable growth trends. Their trends behind Tencent's growth in short videos is growing. They want to capture more of the advertising market. That's sustainable. They're expanding into mini games, which I think is really good. Like I said, offers high margins. Overall, I thought this was a really good report. Sure, not the growth that you would expect out of a high growth company, But certainly when I look forward at where this is going, you know, like I said, I bought some more shares in there. They increased their dividend, so it was a 43% increase in dividend. This is becoming a common playbook amongst Chinese companies, and they increased a share buyback. So their stock purchase plan for Q4 2023 was 100 billion. That says 2022 on there. My apologies, should say 2024. The stock repurchase plan for 2024 is 490. Sorry. 49 billion stock repurchase plan 2022. Stock repurchase plan in 2023 at the end. They're forecasting 100 billion, so they're doubling that. They're going out and buying more shares on the market. Now, some of you might say, why don't they use that money to grow? I get it. However, this has also become a common thread amongst Chinese companies to increase share purchase plan. You know, you talk about value, you talk about company with international crossroads, you talk about company with a diversified business around gaming, around online advertising, around fintech and business services, getting into short video. You talk about the AI multiple that you could have, you know, that they're keen on growing this, you know, take an image and turn it into a video, take, you know, wording and turn it into a video. You know, Chinese companies historically have been very good at short video and video. What makes it different when you add AI there? We're going to talk about Kuaishou, which was really bullish in what they're going to do going forward. Yeah, I bought a little bit more. I already own, but I will be buying this. I will be buying this company blindly now going forward. Not blindly, but you know what I mean. Buying some anytime that I can. This was the bellwether of Chinese companies. It was Tencent. It still is Tencent. This is China. I think you got the shackles off. And I thought it was a pretty good report. All right, let's move on to the next one. All right, so this is Pinduoduo, which has been the darling Chinese company in the last year or year and a half. Now, remember, this stock is up 90% for 2023. Let's take a look at the numbers and then I'll give you my opinion. I mean, what's to say about this company? It was a stellar report and it got rewarded. You know, the share price popped in its US listing. Like I said, this stock is up 90% in 2023, slightly down this year. Tech darling, taking away a lot of market share from JD.com and Alibaba with their Tmall and Taobao offerings. You know, focused on that discount buying. You know, phenomenal platform, really good app, easy to use from what I've been told and the research that I've done. And the report was stellar. I mean, you look at it, you know, earnings per share for the Q4 was 17.32. The market was expecting 11.28. This is all in renminbi. Their Q4 sales increased 123% from quarter 2022. Like 123% from quarter 2022. You know, fiscal year revenue up 57%. Fiscal year revenue from transaction services, that was online marketing services, from transaction services, this is their e-commerce business, up 357%. Adjusted income, 25.47. The market was expecting 16.7. I mean, you know, Q4 adjusted net income growth, 110%. I think fiscal, I don't have this on the thing, but fiscal from remember was adjusted, was up 132%. I mean, how do you go wrong here? It was a stellar report from a stellar company, which is expanding overseas. Now remember, they got Temu in the US, one of the most popular apps. However, there's a but here. They didn't strip out Temu. Right? They didn't strip out their overseas operations like Alibaba does. They give you AliExpress, Kanaya, you know, I'm talking about AliExpress overseas, or Lazada, I should say. And they show you domestic and they show you overseas expansion. Pinduoduo didn't do that. They didn't strip out Temu. They didn't strip out US operations. They didn't strip out overseas operations, which tells me two things. One, it's good, right? And you might be thinking, well, it's good. Why aren't they showing it? one, it's good. One, it's rising. Two, and here's the caveat, they're worried about what's going to happen in the US. They're worried about the tariff. Okay, so remember, under $1,200, if you import a good into the US, you don't have to pay a tariff from an overseas producer. They're worried about that, specifically against Chinese, businesses doing business in China, namely Pinduoduo, AliExpress, Xi'an, Shine, whatever you want to call it. Or they're worried about a complete ban. A la ByteDance, a la possibly Chinese EVs. And I think that's why they didn't strip it out. And the reason why they didn't strip it out is because it was so big, and it was so big they didn't strip it out, and they didn't strip it out because it was so big, and it was so big they didn't strip. You know what I'm saying? And that's the worry when you're investing in Chinese businesses now, particularly tech companies, because everybody's worried about data. It's a national security risk. What are the Americans going to do? What are the Europeans going to do? We're going into an election. Everybody's playing hardball. The next topic I think we're going to talk about, Trump's comments about Chinese EVs. No, we're not. It's in a couple. That was the only caveat that I had around the report. I failed to buy this stock a few times. I wasn't going to buy it up here. I do own some Chinese ETFs, which obviously had exposure to it. They haven't performed very well in the last couple of years, as we all know. But that was the only caveat. Why didn't they strip it out? And I think they didn't strip it out because it was so big. And they didn't strip it out because they're worried about all that's going on. We've covered that last week in terms of ByteDance. And this is a problem facing many Chinese stocks, particularly tech stocks. How do they grow? Well, you got to overseas expansion. How do great countries become greater? They export their companies to the rest of the world. How do you become a dominant economic superpower? Well, your companies become flagship companies. We look at the American empire, Nike, McDonald's, Visa, whatever you want to, so many. But they're facing increasing barriers to entry because of geopolitics and the iron curtain that we keep talking about. But, round of applause. It was a great quarter, a great year from an outstanding company, which has been very, very well run. There were comments a couple of years ago, didn't have a CFO, and there was fraud allegations, etc. like that, but you can't argue with the numbers. They've been fantastic. His numbers are also audited by, top accounting firms in the US, like PwC and Ernst & Young, etc. All right, let's go to the next topic. 2024 highs on three major stock indexes in China. The Shanghai Composite during the week hit a 2024 high of 308.93 points. Woohoo! Shenzhen Composite increased by 1.46. That was a 2024 high. And the China export jumped 2.25. This is all like on Wednesday to 1.926. All 2024 highs. You might be thinking, but it's had a good couple, 5 or 6 weeks. Yes, it did. It kind of opened here during the year, start of the year, went down, and now it's come back up. And that is because of inflows from the northbound connect. So let me explain this to you as I can. There is an image if you're watching on YouTube, but if you're listening, let me explain it. There is a stock connect, okay, that connects the mainland, which you can't buy mainland stocks on, right? So you can't go set up a broking account with your broker to buy stocks listed on the Shenzhen Composite. You gotta buy a dual listed one. However, there are institutional flows that happen, and they happen through a stock connect. So they go through, right? And it's called a northbound if you're going in to the mainland. So that allows Hong Kong and overseas investors access certain equities listed in Shanghai and Shenzhen. Got to get a special permit to buy them. So you can buy, the Chinese banks listed on the Shanghai Composite directly. Again, you got to have a special permit. I think you got to have a certain amount of money in your account with a broker. Some brokers do it, mainly for institutionals, and they come through the northbound connect and they buy. And then the southbound connect allows eligible domestic investors in mainland China to invest in Hong Kong stocks. The northbound connect, and we've seen that in the numbers when you look at the Shenzhen and the SSC, we talked about 9% on the SSC, 9% on the Shenzhen for the month, and the SSC was about 5%. They are mainland stocks. In order for overseas investors to access those mainland stocks, they got to go through the northbound connect. The net inflows of the northbound connect from Hong Kong so far have surpassed 2023 total. So altogether in total, what we saw from the northbound connect has been surpassed so far this year. The year-to-date inflow, this is taken from a couple of days, was 70.6 billion yuan or 9.955 billion US dollars. That's last reported as of Friday. Total inflow for 2023 was 43.7 billion yuan. So, an 80% increase. February saw northbound capital inflows of 60.7 billion yuan, marking the highest level in about a year. So, multiple things. Yes, overseas investors, so funds coming in, picking up their Chinese exposure because they've been underallocated. I've been saying this for a while. And two, part of it, I think, is state-owned enterprises who are operating overseas are using their profits and repatriating that into buying Chinese stocks. Record flows, record gains for the markets. Supply and demand thing, people. More people want it. Prices rise. But we saw that during the week. And I think you'll continue. I mean, there has been talk that the national buying has slowed down somewhat, but we've still seen rallies, which is good, a good indication. I think retail money's coming back within China, feeling a bit better, even though some of the news headlines around the property market isn't so great. But this is mainly institutional buying, and I think part of the record flow is, we talked about it in the last month or so, that under-allocation of China, particularly in your emerging markets allocation, that record inflow into India. India's had, a bit of a pop of the bubble, particularly amongst the small caps. I think you're going to be chasing your tail to get that EM exposure or that Chinese exposure, particularly because I think the economy is okay. It's not great, but it's okay. But I'm okay with the policy support that I'm seeing. I'm confident that the Chinese regulator, which has been a great manager of their economy for the last 20 years, let's make no mistake about it. You might not agree with what they do, but they have managed their economy really well. I'm confident they're putting in the right place, and they've got further policy measures or support mechanisms to come into place to ensure that they get through this cycle. All right, former president and presidential candidate Donald Trump was at a rally in Dayton, Ohio on the weekend, on Saturday. And you might be thinking, what the heck does that have to do with Chinese stocks? It's got a lot to do with Chinese stocks. And it's going to be interesting, covering what happens in US in relation to China policy as you go into an election. I'm not trying to say too much, otherwise I'm going to get picked up on the algorithm. So that's why I'm kind of skirting around it a little bit. However, he did say China now is building a couple of massive plants where they're going to build the cars in Mexico. I'm trying to do a Donald Trump impersonation. I was about to, but I thought, no, that would just be dumb. And they think they're going to sell those cars in the United States. No. We're going to put 100% tariff on every single car that comes across the line, and you're not going to be able to sell those cars if I get elected. Okay. So some tough talk, and we're going to expect tough talk all the way through. I mean, how tougher can you get? They're going to ban ByteDance or TikTok. So what's he talking about? He's talking about a proposed plan that BYD is looking to build in Mexico. And some of the reasons people think that they're building that plan into Mexico is that they can then go through the NAFTA agreement and get away from the tariffs that have been lumped on Chinese cars entering the US, which at the moment is 27.5%. So if you're selling a car for $10,000 in the US, they lump it with an extra $2,750 on top of that, trying to decrease its competitiveness. Hard to do that because there are sourcing requirements within NAFTA. So I don't think that is actually the play. BYD has also said that they're building that plant to service Mexico, Latin America, and South American markets particularly. However, it brings into play the uphill battle that Chinese EV makers have entering the US. Now, if you look at Chinese cars, they are now the largest car exporter in the world, overtaking Japan in 2023. When you look at stages of car manufacturing for countries, they do domestic production, they then export overseas, and then they build overseas plants. China's doing the same thing. We've got BYD building a plant in Hungary. We've got Geely. I think it's Geely is looking to build a plant in Mexico. This is just the way of the world. In fact, in my opinion, if you allowed Chinese EV car companies to export without restrictions, you might be calling the kettle black there, I think they would dominate the car market within 10 years. Dominate. And we would get to our EV targets quicker if you just allowed them to sell their cars, because they're better. They're better quality, they're more efficient, they cost less, they're better software. On the whole, they're just better. They got great ranges, they got everything you want. They got a small, they got a hatch, they got a sedan, they got a four-wheel drive, whatever tickles your fancy. I'm not a big car expert. But they can't. So there's also the Inflation Reduction Act, which lumps, I think, an extra $7,500. So it incentivizes American citizens to buy local with a $7,500 incentive, somewhere around there. And then you've got the European Union talking about increasing tariffs because of protectionism run by the Chinese government, protecting them along 15 to 17% of the cost of producing an EV, which I think is fair 10 years ago. I don't think it's fair now. It's a very efficient, cutthroat market. I mean, you look at China, and this is why you've seen Chinese EV companies, and we'll talk a little bit about XPENG. You know what, I'm going to talk about XPENG straight after this, and then I'll finish on Kuaishou. Chinese EV companies have been smashed. And the reason why they've been smashed, the reports have been good. The earnings report, when we covered Lee, XPENG was pretty good. BYD was pretty good. Geely just reported yesterday, didn't get to run it, pretty good. But it's like, okay, the increasing competition is a cutthroat market in China. We're talking about price cutting. 30% of EVs in China, 30% of cars in China are now EVs. They've accelerated really quickly. Where's the growth? And the growth has to be overseas. Yet every time they go overseas, particularly to the two markets they want to be in, where the highest margin and highest profitability are going to be, Europe and the US, they're being blocked. Yes, there is Southeast Asia. Yes, there is South America. Yes, there is Eastern Europe. Good markets. Not as good as Europe and the US. Not as good as Europe and the US. And I'm not surprised if some of, Biden or Trump come out and talk about a total ban on Chinese EVs coming into the US. And that's where the trouble is here, particularly for Chinese EV companies, but broader when we talk about China tech stocks. And this only up the rhetoric around it. And you're going to see a tough on China policy going forward. And it's been a tough on China policy since the Trump years, and it's only been extended. I mean, you could argue Biden's been tougher, particularly around semiconductors and technology and this small yard, high fence. But this is bigger yard, higher fence. These aren't tariffs of 27. These are 100% tariff. So tough. And then when you look at XPENG's numbers, it wasn't bad. Got sold off. It's been sold off. Expected deliveries between 21 to 22,500, up from 18,230 last year. They're launching 10 more new models over the next 3 years. The quarter four results were above expectations, helped by cost cuts, leading to positive gross margin revenue growth. They narrowed their losses. Their revenue grew by 154%. Their gross margins improved from 6.2 to 6.2 from minus 2.7 the previous quarter. They delivered 60,000 or just over 60,000 EVs, up from 22,000 last year. I mean, these are great. However, the stock is down 32.7% year to date because people are worried about competition. They're worried about growth. They're worried about margins. But most importantly, they're worried about next stages of growth in a very, very, very cutthroat domestic market. Like, think about the competitors in Chinese EV. XPENG, BYD, GM, Li Auto, NIO, Geely, Tesla, Xiaomi, Evergrande. That was a joke. And that's why these stocks are getting sold off. Cattle, the battery maker, killing it. Because it's giving them the shovels to dig the gold. All right, let's finish off with looking at Kuaishou. When Kuaishou listed it, it was it was ByteDance's competition within China, short videos. Right? And I remember when this thing listed, it was at 400. I think it went to like 600 or it listed at 200, went to 400. I don't know. I think the whole time I was like 600. Anyway, it's trading at 50 Hong Kong dollars at the moment. Not bad. It wasn't bad. I keep saying not bad. They're not A+ ratings, but it wasn't bad. They slight missed on revenue. But it was a 15.1% increase from the year before. Okay? Their online marketing revenue, they've moved to, marketing, selling goods on the platform, up 20.6% to 18.2 billion yuan. Live streaming revenue was flat. Market didn't like that. Adjusted net income, they went from minus 45 million yuan to 4.3 billion. So significant increase from a loss. Their expectations though were 3.2. They beat. They went from an adjusted EPS of negative to a profit, and they announced a share purchase buyback, which is common amongst Chinese stocks. However, what I wanted to highlight was the bullishness of the CEO Cheng. I won't pronounce his last name because I'm just going to stuff it up. They talked about their AI strategy model and how it's advanced since last year, focusing on developing and training large proprietary models. And he claimed confidently, with confidence, that in the large model collars, KOLORS, reaching GPT 4.0 performance levels within 6 months and already surpassing Midjourney V5, which is a competitor. Kuaishou has started R&D in video generation. This is the big move here within Chinese companies. And I think they're going to lead the world. They're going to innovate here. Aiming to enhance a short video ecosystem by combining generative models with creative tools. This is where you give it a picture or you give it a words or a couple of words and it creates a video for you. On the line with, what's the American one? I'll remember in a moment. The company launched large models, Kuai and Colors, in the second half of the previous year, with Kuai 3B excelling in humanities and China-specific topics. Color is capable of generating artwork from text, featuring strong text understanding and diverse transformations. Kuaishou reported a 20.5% year-on-year revenue increase for 2023, double-digit growth, totaling 1,134.7 billion yuan, with significant contributions from online marketing, live streaming, and e-commerce. The company adjusted net profit exceeding CNY, Chinese yuan, 10 billion, marking a significant turnaround from a loss to a profit and surpassing market expectations. It was down. However, listen to this guy and what he said, he was very bullish on their AI models, which makes me start to have a look at this company. Didn't buy anything. It's making me, we talked about the race for the generative AI, your ChatGPT, ErnieBot, and a couple of private companies within China. There's also the race to take text to video within China. And I guess you're kind of looking at 3 companies: ByteDance, Kuaishou, Tencent. You sprinkle a little bit on both. You look with ErnieBot or the ChatGPT, you got Baidu, Baba, Tencent, maybe Meituan. Probably not. When you looked at the boom in e-commerce, there are a few winners: Pinduoduo, JD.com, Alibaba. I think there are going to be a few winners within China here as well. Although the ChatGPT version, I think it's a winner take all. I thought it was interesting. We'll end on that point. Good luck with your investing, guys. Reach out, please, in the comment section. Leave us a like, hit the subscribe button, give us 5-star review. And as always,